So, what a crazy day. Um, the entire stock market, the Nasdaq, the SPY, essentially everything sold off today. And we're gonna take a look at Amazon here. So initially there was a gap down and then a sell off to 3,400. So I'm taking this snapshot in time because this is where I made my first position. Now, I didn't mention that I sold, not sold, I bought a straddle. So I bought a call and a put option at the close um, for the 34.65. One call, one put option. So at this open, um, I tried to initiate a cover on both options for a $2,600 gain. Um, what happened was that didn't trigger, and so it started moving around really quick, and that 2,600 quickly changed into 1,500 because initially if you take a look at the 1 minute in the beginning, you will see a lot of movement. Okay, here this 1 minute right here. So the initial gap down. So all of this right here kind of scared me out um, from holding on to my straddle, which was the other reason why I was scared to hold was this 61.8. So I wanted to take profit because what I didn't want was something like um, a reversal at this point. You can see on the 1 minute easily, the 61.8 on the Fibonacci, which is right here on, which is also right here on the 100-day moving average. Okay, this looks like a key resistance or support level. This looks like a key support level where it can potentially bounce. So at the time, I wanted to close that position. So I closed for a $1,700 gain instead of that $2,600, which I missed because I was trying to fine tune. I should have just closed as soon as possible, I get 24, 2,500, whatever, because there's always going to be that initial bounce. And this initial bounce can lead you to make, decision that are too quick. Like the opportunity loss, right? Going from, if I would have covered right away, I would have made 2,500. Instead, I saw it went down to 1,500. Eventually, I covered for a $1,700 gain. So somewhere along this whole movement on the 1 minute, you can see it's above the 61.8. And if you're looking at the 1 minute, it takes forever. Okay, the movement on the 1 minute takes forever. So this right here is a visual trap because you think this gap down, you see the 61.8, you see the 100-day moving average. All you're thinking about at the time is that it's probably going to bounce because, I mean, technically, you look at this, you see this is a huge a huge gap down. And plus, you knew that, option expiration, quadruple witching or triple witching also was a sell-off, which is huge volume. So this was, this initial movement was a follow-up from Friday. Um, the whole volatility and the whole, extreme movements. So I had an order to buy the 2400, the 3400. This option, the 3400. Let's take a look at Amazon here. So the 3400, okay, on the 1 minute for today. So I have a limit order essentially for right here at 42. Okay, right here at 42. Some actually I think it triggered. I think it's triggered here actually. Man, looking at this is so silly, right? Because this is like the first 42, the second 42, and I trigger on the third 42 on the way down. So yeah, just brain seed. Essentially, I convinced myself that the 61.8 was a floor, a level, a concrete level. It was gonna be like, especially with this whole 100, and that is just a visual trap. That is essentially a trap and not understanding the technical. It's just not understanding the technical, because I mean, just because it looks like it's a floor, anything can happen. You got to be flexible to know technically. You got to see it technically that 42, 42, 42 break. Okay, so when it broke, I was like, oh man, okay, so what do I do now? Um, of course I'm gonna add one. Of course I'm gonna add one. Even though I wrote in my notes, I wrote millions of times in my notes, don't add one, essentially. You know, never add one, never add two. It's just a discipline. But of course, I added one. I think I added one at 35 right here. Of course, it got down lower. I could have covered for a small loss. At one point, I think I was down maybe 250. I could have covered for that small loss. Of course, I didn't, because I'm waiting for the flat line. I'm waiting for that little bit of that flat line. Let's see. Let me see what's 35. Yeah, right here. Or somewhere. I don't exactly remember. Maybe, yeah, right here when it went to 37. Uh, but anyhow, of course, I didn't cover, and then it just kept going down, and of course, I covered for a $2,000 loss. Always the same bad habits. Counter trending or counter trading, meaning I'm trying to bottom time, bottom fish, adding one, not taking small losses, being impatient and rushing in. I took that position way too early, being overconfident, because at the after I made that 1700, I was at an all-time high again on my account, all-time high. So I was overconfident, and risk management, bad risk management, really bad risk management on a day like today, and then to add one to it, and not seeing traps. Again, the 61.8 was a trap. This 61.8 was a trap all the way. So I was up 1700, then I lost 200, 2000, and so now I'm down 300. I mean, that's just ridiculous. And I also sold somewhere along here, I sold a straddle. So I sold a straddle because this Amazon VIX was at a high. So I sold a straddle on the 3400, one call and one put, hoping, well, when it went all the way up here, when Amazon was crashing, uh, let's go back to the 5 minute, because there's no point in looking at the 1 minute. When it was crashing, I think I was down 2,500, almost, maybe even almost 3,000 at one point. But I wasn't gonna cover. Normally I would cover, but I was not going to cover. And the only reason I wasn't going to cover was because my portfolio was at a all-time high again. Well, it was in the morning, so I had money to lose, but it was essentially it was stupid, because uh, these type of days are days that can literally blow your account if they continue to sell off, because there's actually news that follow this madness, and it's kind of funny how the news just is perfectly timed, so that it looks, right when I said technically it looks like the QQQ is going to sell off right here, right? It looks like it's a magnet point to get to here. The next, Monday was when it started, like, the sell off. right then Monday was a sell-off. And there's news on Everglade China property not being able to meet developers, I guess the risk assets on the developing of real estate, and the debt was too high, and so it's a domino effect, and it was going to be, everybody got scared. Everybody got scared. You can see, I mean, at this point, almost impossible to not lose money today, to be honest. I did come out with a loss of only 200, only 200. Um, so that's amazing that I came out with a loss of only 200 despite everything that happened. Um, but it's sitting right there. The reason why, really, the reason why I lost is that I abandoned the 15-minute in the morning because I had to go back to the 5-minute to really see the granularity of what was going on. And you can see at the time, it's just so much was going on that I didn't use the 15 minutes. But in hindsight, had I used the 15 minutes, it would have looked really clear what was going on. I mean, this 15-minute, you can see exactly what was going on, and then it was just a complete sell-off. Um, Here you can see just it's just going from, it's just, they're trying to hold it at the 50% on the Fibonacci. Then it crashed. It almost went down to the next one, which is 38 on the Fibonacci. It was able to hail, and so technically on this 15 minutes, let's take a look at it on the bigger scale on Amazon. Technically, if you look at it on the biggest scale, down here would be the 38.2 Fibonacci right here. So it was able to hold the 38.2 with, these are doji tail, right? Both these are doji tails. So this one was a support candle. Perfect candle to go back to VWAP, especially with the final, I guess this is the final hour. This is 15, 30, 45. So the final 45 minutes, they were able to get it back to VWAP. I mean, this is just so classic technical. It's almost ridiculous to think about it. Back to VWAP. And so, but if you're not patient during days like this, you have to chase on the way down. Like I said, you have to chase on the way down. And even though I said it, and I'll say it multiple times again, I don't like to chase, but it's the best way to make money. It's essentially it's the best way to make money, because if you did chase, even though you can see this open up at 33, which is high. If it opened up at 33 or whatever it opened up at, you can or open up at 46, but it went down to like 34, close to 33. If you hold it, you can sell at the top at over 100. So that's over $7,000, over $7,000 on one put position if you chase. And chasing is fundamentally the easiest way to make money, or the most the best strategy to make money is to chase. It is very difficult for me to chase. I'm just, again, it's just my habit, my nature, my instinct to not chase, even though I write it down multiple times. Don't count a trend, don't try to pick the bottom. My instinct comes back to me, and I do it. Okay, but I'm I still make a consistent gain because I know of my mistake, and I know um, how to manage properly just based on risk management. I still do overall correctly what I need to do, reading the technical, so that I still make consistently gains on my portfolio. However, I need to clean up these mistakes one way or another to get rid of these bad habits and to switch over to chasing. Somehow I just need to do it one way or another. And once I'm able to do it successfully, hopefully, that is when I will be really where I need to be to make, the maximum gains on, you know, option trading. So I wrote down here's what I wrote down, right? Minus 2K, gap plus 1, minus 2K. Here you got one wave, two wave, three waves, four waves, before it flatlined, then it went back up. And then you benchmark it with, before I show the benchmark, what else do I want to say? Um, yeah, not really not looking at the news in the morning, being impatient. And even though I know it's like whatever news, let's just say whatever news that came out, um, it can easily be disregarded and went right back up. This whole selling off it's amazing to see it, to be honest, but it happens so often. If you look at it, um, if you look at it in the past, you do see it happens quite often. These type of sell off, like back here, okay, it does happen quite often. It's just we forget it because this is back in May. We forget it. So I pull up what happened in May, May 3rd. I pull up the notes. I lost 3K. I lost 3,000 on this trap, I think. Based on what I'm writing, I lost 3,000. Um, and here is the 38.2. So that was the target. So somewhere along the line, I got trapped with this 15-minute. And here that low of day. It went to low of day. I'm surprised. I'm not surprised. Anything is possible, right? But it could easily have gone to low of day today, to be honest. Like this could have went all the way to, how do I get to, yeah, right here. It could have easily gone to the 38.2. There is no reason why it couldn't go to the 38.2, which is a little bit below 3,300. 3,300. It could have. There's no reason why it couldn't continue to sell off. So if you look at the VIX, I don't think I'm gonna look at these, or maybe I will. But if you look at the VIX, um, here it went all the way up to this top level, and then it did not. It really, didn't reverse until well into the afternoon, like at 3:20. So it was only, I mean, and it closed, yeah. So it's only like 30 minutes, um, before it, complete collapse in the, not collapse, but the, correction in the VIX. So at this point, I mean, based on what we've seen in the past, look at that. It's gonna bounce around a little bit, this VIX. So tomorrow, well, it's going to go, pretty much gonna go, it's gonna be extreme, is my point. So selling the straddle tomorrow would probably not be a good idea. I still have the straddle that I'm holding, which is crazy that I didn't cover today. Which I think I'm down right now. I'm down on that straddle only. I'm actually down only like $50 on that straddle, and I should have covered, to be honest. Which is, now looking at it, it's always in hindsight where you see you doing stupid things, right? Because this Amazon VIX right now, it's, let's see where it's at. Yeah, it's at 32. Did I look at the wrong VIX? I did look at the wrong VIX. So this VIX, it's probably the same though. This VIX is up here, and then yeah, it's the same. It's essentially the same movement. So this VIX right here, I sold it, I think somewhere around here, and based on, I mean, it's still higher than when I sold it. However, I'm only down 50. But this thing is easily gonna probably, it can very much, be another sell off tomorrow. In fact, there is a good chance it'll be another gap down tomorrow. There's no reason why it's not. There is no reason why to suspect, just because you got this last minute bounce, that it's gonna gap up and shoot. I don't know, it can. Anything is possible. The way the market now is, anything is possible. It can gap up, go to 61.8, and then Tuesday would be turnaround Tuesday, the opposite direction, right? Instead of being turnaround Tuesday going this way, it'll be turnaround Tuesday going that way. Now it can be turnaround Tuesday where it initially sell off and then it recovers. So turnaround Tuesday can be either direction. As long as it goes one way and then reverse the other way, either it goes down then up or up then down, it's still considered turnaround Tuesday. So turnaround Tuesday most likely will be the setup for tomorrow. And I would essentially, I probably would try to either either buy the options, buy the straddle. I mean, at this point it's 33.5, buy the straddle, but it's still so expensive, right? So if you buy the straddle, I mean, there's so many options, there's so many ways to play it, but I think the only key way to play is actually just continue to monitor the 15. Continue to monitor the 15 and the 60, right? I mean, there's no point in going to the 5. If you go to the 5, you're going to get set up to get trapped. One way or another, you're going to get set up for trap. And you're going to not blow up your account, but you're going to take losses like I did with that 3,000. So let's take a look at some of the other stocks. Let's just take a look at the QQQ, where, I mean, technically right now, you don't even want to predict a direction. You don't. These type of setups where adjustments and things that go on technically, but also because of news trigger event in this case, like possibly like the Everglade property of China. Anything is possible. Honestly, I mean, I'm telling anything is possible. So you don't want to predict. You don't want to predict. You just want to go with the strategy, either selling the straddle when it gets really to the extreme. Like for example, if it gets to 40 or whatever, you can sell the straddle. Just wait for the extreme. If you try to pickpocket, you're going to get burned one way or another. If you pickpocket, scalp, try to pick $50, $100, $200, you are going to get burned. There's just no way around this type of, because you can't read the 5. When you try to pickpocket, when you try to scalp, you're reading the 5, but the 5s are all traps. And if you get in something, you just gotta be willing to take the small loss. And most likely you will take the small loss, because the minute you get in, you're gonna be down at least $50 to 100. One way or another, the minute you get in, you're gonna be down $50 to 100. So trying to pickpocket, trying to scalp is not the right idea. For me, I'm probably going to wait for a chance to buy the straddle on this guy. If there's an opportunity to when it to move in the morning, I'm gonna let it move in the morning. Um, and maybe at 30, I don't know. At some point, I will see where and just tracking the 15, and at some point, I will probably try to buy the straddle, um, and let it go one way or the other, and try to make, three, four, $500 on that. I do have the other straddle that I have sold, so I need to cover that straddle sometimes tomorrow morning. Probably just cover it. I'm down 50 on that one, so probably just try to cover it for 100 or 200 is all I need. I mean, just to feel, I'm doing sufficiently fine. And so let's take a look at the SPY and see if there's anything on that to even address really, because the way it is right now, I don't even think there's not much you can do at this point. Um, yeah, it's a bounce on this 100-day moving average. Like I said, it went to the 100. That was expected, right? 100 is down, so it went and then it bounced off of it. At the very end, it bounced off of it. But it may just retest it tomorrow. I mean, these technicals really don't mean anything at this moment. It really doesn't mean anything at this moment, because There's just so much going on. Um, the IWM too. I'm gonna look at your stocks because nothing here. You everything is down, and there's technically anything you try to get in and take a look at. Try and go, yeah, just stay. Maybe even read the day at this point. It's probably just wait a day before doing. Probably the best strategy in my opinion because everything is just so crazy. Okay.